Welcome to another episode of the AI Edge podcast. We are here to help marketing and advertising professionals stay on top of AI news and what it means for the industry. So we are here with another special guest. We have Brian Wieser of Madison and Wall. Brian, thanks for joining us. Tell us a little bit about yourself.
Well, thanks for having me. What can I say? I am CEO of this company called Madison and Wall. We're a data research and consulting and advisory firm for the advertising industry. Banker originally by training, if you exclude my period pursuing post-punk pop rock stardom, and who became an equity research analyst, agency person, ad tech person, briefly back to Wall Street, then agency land again, and here.
Well, the most important and interesting part of that whole introduction was you were a rock star at some point. I mean, you're still a rock star.
Well, you know, my pathway, of course, to professional success was after music was David Bowie. How you say? I'll tell you. Securitization, my friend. The first, the first instance of a non-auto or real estate based asset that got securitized was David Bowie's catalog. It's like, oh my God, you can do that? This is in 97. It's like, oh, that sounds interesting. And indeed, banking can be very creative for good and for bad. Nonetheless, that was my pathway.
Wow. Okay. I'm already, mind already blown. Okay. We're doing this. Also we have Myles Younger. Hey, Myles, how are you?
Hello. Hey, Brian.
Okay. Let's get into top stories of the past couple of weeks. So the first story we want to talk to you about, Brian, is there's been this interesting cat and mouse game going on between publishers and AI companies for a while now, but I think it got more interesting over the past couple of weeks because Time Magazine, or Time Inc., was working with an ad tech company called Mobian. And, you know, nowadays publishers put out like these very basic kind of like text versions of their websites or, you know, markdown versions of their websites for the AI crawlers, right? Make it easy for the AI to crawl all their content and surface their information in the AI. Now, in Time's version of these files, they started including little sponsored sections that they were selling to advertisers, right? And these sponsored sections were kind of created like FAQs. So, you know, for example, if Time is working with, Roomba, Time, you know, will build a little piece of content with Roomba that has a bunch of FAQs about Roomba's latest products that it'll then stick into these text files for the AI crawlers to then have more information about Roomba, right? And if somebody is shopping for a robotic vacuum, maybe Roomba will show up better in the AI because it was able to crawl that sponsored section of Time's text file, right? So Time went off and started doing this and selling these kinds of ads for the AI crawlers. And then Perplexity, this past week came out and said, we're shutting this down. We're going to basically tell our crawlers not to crawl this stuff. And by the way, if we see more of these publishers engaging in this kind of stuff, we're going to lower their whatever perception index or whatever quality index that Perplexity uses. So, you know, little cat and mouse game going on. I think there's also some story floating around about how publishers in general are just considering more and more if they should just be shutting down the AI crawlers entirely. I think, you know, there was obviously a lot of consumer attention at Time is being sucked away from traditional search into AI. And I think that gives the publishers maybe a little bit more leverage in some cases, right, to do some of those things. So anyways, pretty interesting. I think this cat and mouse game is going to continue. The other LLMs may or may not follow suit. I would imagine they do at some point. I have a bunch of thoughts on this, but before I say anything, Brian, what do you think's going on? What's your reaction?
I barely know how to spell AI, so let's start there. Now, what I would say is that a lot of this is very small and very, like, in the grand scheme of things, it's experimental. It's the right way to think about it. I think you have to give credit to any publisher that is trying tactics like these, and hey, some will work and some won't. The absolute amount of money we're talking about is, again, negligible all around. I think that from the brand's perspective, they also need to be experimenting. The opportunity presents itself, they should try it. We've heard, and this is one of the fascinating things here at Madison and Wall, and I'm not pitching us here in this context, but Sandra, we sell ads at Madison and Wall. This was not part of the original plan of Madison and Wall, but we found to my shock, we sell sponsored posts. They have to be high quality editorial products, etc. But One of our clients did not want to buy a banner ad from us sponsoring our weekend product. He said, no, I need to get the sponsored post because the LLMs will crawl it. It will live there. It will stay there. Mm-hmm. It's like, oh my God, wow. This is fascinating, right? And so when you think about it, I think that it's a good example of that experimentation. So maybe that you end up with a situation where Times content is essentially sponsored by, say, Roomba. There are editorial articles all of a sudden about Roombas all day long. And even the story on the presidency, it features how the Roomba cleans the White House while all this chaos is going around. I don't know. The point is that it's worth the experimentation because nobody really knows what sticks. It's all very, very small right now. It's very nascent. I think it's safe to say, though, that, right now, there is not that much spending grand total on whatever you want to call it, AEO, AEM, AES, EM, EO, AIO. And so it's all experimental is the right way to think about it. It doesn't really dramatically change anything if something doesn't work right now.
Okay, agreed. No disagreement from me. Myles, what do you think?
Yeah, it'll just be really interesting to see the battle of tug of war as, it's almost interesting. There's Brian, you point out it's experimental, and there was the same push-pull with search, with social, where a lot of times it's publishers go, in the context of, mobile, it's maybe app publishers, whatever it is, they go out and they do an experiment, and then the big guy figures out if it's sticky or not, and they just absorb it if it ends up being sticky, tragically, for the Time Incs of the world.
I mean, the bigger point, I think, from a Time Inc. perspective is that this isn't going to save them. At the end of the day, open web is not dead, but dying is a better way to characterize it. And none of this helps. Either way, it's going to be negligible. I think that you have to experiment.
Sorry, go ahead, Brian.
Sorry, the bigger point is they have to try things. Sure, why not? Because something might work incrementally, but at a sector level, it won't make a big difference.
Yeah, I totally agree. I think, to Myles's point, the reason Perplexity is saying, hey, we're shutting this down, it's all about user trust, right? We need to make sure the answers that we surface are completely neutral, not influenced by anything. You could argue that, them sticking a little FAQ about Roomba doesn't, there's a gray area about the neutrality of the content that an AI crawler is looking at in the first place, right? Whether it's coming from a sponsored, they're already crawling a bunch of sponsored stuff all day long, right? So I think that's a little bit of a front, right? From Perplexity to say, hey, this is all about user trust. I think the bigger thing is, hey, listen, Perplexity, I think, got out of advertising a year ago. They were the first ones in, and then they were the first ones out. At some point, they're probably going to have to get back in. And if they're going to get back in, how do you go to an advertiser, look them in the eye, and you're like, hey, you should buy ads from us or some kind of paid placement from us directly. And then the advertiser's like, but I already buy it through all the publishers in the world. Why am I paying you directly? Right. And so that's at the end of the day, it's probably about monetization and control to a certain extent. So
one thing I'd add is that this is giving me flashbacks to, again, 2006, 07, when SEO was becoming much more, widely practiced. And I recall learning about Mitsubishi, let's explain what they are, right? Are they a car company or an automobile company? Well, they wanted to be seen as an automobile company. And so they paid an agency to do everything possible to make sure when you search for Mitsubishi, you saw that they were an automobile company, not a car company. Okay, if there actually is a meaningful distinction in the eyes of someone that causes some fractional impact on sales, all right, fine. But to your point, if a consumer is searching for Roomba on any of the AI tools, they're doing it because they want to know what they need to know about this thing. And if they're getting marketing messaging from the company, that actually might be useful, but it's going to be this nuanced thing where are they described as a household sanitation device or a vacuum cleaner? And what is the thing that you want people to repeat? Well, if it keeps saying this household sanitation device, Roomba, is a helpful aid to your house. Well, if you start thinking of it in those terms with that language, maybe on the margins it has some impact, but it's probably pretty negligible as well.
Yeah, I agree. And now that we're talking about vehicles, I don't know if you guys saw this news. The ultimate driving machine, BMW, now serves Spider-Man ads when you turn on your BMW. So there's that. Okay. Next story. We're going to move to the next story. The next story, Brian, might be near and dear to your heart because you talk a lot about principle-based buying and you have spent time at the agency side of the industry. And so there's a story about how agencies are now arbitraging tokens, like AI tokens, just like they have with media in the past. So, for the last couple of years, I think holdcos were going to market saying, hey, we're building all these AI tools. We're probably like eating a lot of the costs of those AI tools. But now we all know like the AI costs are catching up to all of this AI innovation and the tooling. And so, hey, we're the agency and now we're going to charge you for these AI tokens, but we're not going to charge you for them in the conventional way. We're not going to pass through the cost. We're an agency. So we always have to figure out how to make margin on everything. And so we're going to arb these tokens. We're going to buy maybe upfront and in bulk. And then we're going to kind of build them into some kind of like principle-based buying model. And we're going to resell them, maybe mark it up, maybe price in some risk. And that's going to be a new business model for us. And so, listen, I don't know how much this is happening. I don't know if it's pervasive yet or if it's early days. I don't know if there's a real significant opportunity for the agencies or if it's just like another way to make a few bucks. But I do think it's interesting to think about, given like the agencies are pushing their businesses more towards, hey, we're an AI business, or we sell AI tooling and not necessarily services. We're seeing that from some of the companies like WPP and Publicis, et cetera. So, what do you think, Brian? What's going on here?
First thing you have to look at to form a view about whether or not this is shenanigans or this is just business is it compliant with the language of a contract? And the vast majority of activities that agencies have participated in that got a bit of a black mark were either explicitly allowed by contracts or just not referenced, and they weren't prohibited, therefore they were allowable. And as noted, agency analyst Machiavelli once said, "A prince who is not himself wise cannot wisely be advised." When marketers choose not to pay for services from entities who can provide consulting capabilities, maybe yourselves, I don't know, who understand a thing or two or three about AI, and they get screwed in some form, well, that's the marketer's fault. But when it comes to something like this specifically, it's plausible. It's just the way that something is getting priced, because sometimes what the customer wants and what they're able to pay for are very different things. And sometimes the client, and we can call it complicit client syndrome, clients are fully aware of this, but it's just they know the way that they get their contracts done. I think we've all seen this. Certainly from a Wall Street perspective, my earliest experiences professionally, where you saw that, investors don't really seem to care about paying for research. Well, maybe that's why it's the bankers that are funding the good research. Does that introduce certain conflicts? Absolutely. Does eliminating bankers funding research and now making it funded by trading create different conflicts? Absolutely. But the bigger idea was that it's this idea that resonated with me about bundles of products. The idea that when you're paying for equity research on Wall Street, you're really not paying for equity research. You're paying for trading, and you're being given the research for free because ideas are cheap in the eyes of the buyer, or it's hard to justify paying for ideas. So you've got to have the thing that you can budget for and can't get away from paying. If you're the decision maker who's authorizing this thing, you've got a process, you've got to work with this process. You've got a budget for trading, you don't have a budget for research. You use your budget to fund trading and you get a bunch of research. Okay, that was the late 90s, early 2000s on Wall Street. It's not any different than agencies and saying, hey, you want the media, you got to get the creative. Back in the prior to the separation of media and creative, right? They were bundled together because marketers had like one line item for their agency fee. Fine, you got a separation of media and creative. Now there's a separate line item. Marketer wants ideas, but they have a hard time justifying paying for it, but they need media. Okay, so now you bundle media, which they can't get away from paying, with the ideas, the service, the big thinking. And that's kind of all this is when you think about it. The more sophisticated clients understand there's what they can budget for, what they can pay for, and what they value. And those are sometimes two totally different things. They might need the tokens, but they can justify paying for the tokens, but they really want the ideas. Or the opposite could be true too. So I don't look at it as anything particularly meaningful as long as it's in line or not contrary to the language in the contract.
Brian, is Madison and Wall tracking the changes in agency cost structures with respect to AI? Because they're trying to accommodate a new factor into their cost structure here and potentially turn it into a profit center.
This is not something that's visible to either public or private companies who make disclosures. It is a question I've started raising and trying to explore because I'm really, really curious about the actual like tangible cash costs to maintain a campaign or establish one using more modern techniques, like using these AI tools. If there's tokens involved, what does the cost structure look like and how does that evolve? I actually don't know, and I'm not aware of any data that would allow one to see it from the public domain perspective.
Interesting.
Interesting. If we zoom out, like the whole idea of AI, if you're an agency, right, and you're building these AI tools, the whole idea is like, hey, we're going to fire a bunch of people that were doing all this stuff, and we're going to bring in AI, and AI is going to do it faster, better, and cheaper, right?
Well, like Sam Altman, I didn't know you were hosting this podcast, but Sam, if you're that,
hi, I'm Sam.
No, that is a very Sam Altman-esque point of view, and I think it did proliferate. No, I think it was never the case that either the agencies or the marketers said they wanted to get rid of the people. They want to contain costs, absolutely. But the budget is the budget. And this is the thing that was missed when Altman made his quote that 95% of what agencies do can be eliminated because AI can do it just as well. Okay, great. That's if you expect that the same thing you did last year is the same thing you're always going to do, sure. I could probably, I don't know, I'm trying to think of something we would have done 100 years ago. Yes, I can buy jam for 1/100th of the price than what it would have cost 150 years ago, let's say. Am I buying more jam? Yes, absolutely. Sorry, that's a terrible analogy. The reality is that the marketer budget for jam or for services or whatever doesn't change that much from year to year. So then the competitive expectation is that, okay, someone else is going to offer more services for a fixed budget or more tools or more capabilities or whatever. The budget doesn't change. The output changes. Whether that means more variations, maybe more investment on the strategy side, maybe it means more investment on the servicing side, the socializing of the idea side. Maybe, you actually do need some important IP, but you can, to make your creative, like a song that everyone knows, but you can reduce your costs on the film shoot going to Brazil, whatever. The total budget isn't impacted. In fact, if it were impacted, you see agency revenues decelerating. They are not. They're actually looking stronger, not terribly strong, by the way, but stronger now than they were last year or the year before. And AI, last I checked, is not getting weaker.
Okay. Well, I want to talk to you more about the jam analogy at some point, but we don't have to do it right now. We can keep moving. So, next section, quick hits of the week. So we're going to go through lightning round, Brian, some other top stories.
Sorry, I thought you quick hits. That's not me.
I believe in you. We can do it quickly. So we got 4 or 5 stories here. I'm going to go through them quickly. If you got something to say, Brian, just jump in, interrupt me. Otherwise, I'm going to keep rolling. Okay. So first quick hit of the week, ChatGPT apparently is experimenting with something called like agent ads. So the idea is, if you're in ChatGPT and you see an ad, instead of, clicking on the ad and then going to some landing page externally, or even like going to some shop page within ChatGPT, they're now testing this idea of like going to a branded agent within ChatGPT. So basically a custom GPT that's owned by some advertiser or marketer, where you could start talking to that GPT about, a product, or asking it questions, or asking it to do some price comparison for you or whatever. Pretty interesting. I think there's like some interesting implications for like just this notion of how ChatGPT ads are or not going to work. What's the right format? What's the right functionality? What's the right experience for users? It's not out, I think, in the open yet. I think it's something that some guy discovered as like a thing in the back end, and he was messing around and saw it. But it does kind of break the traditional, like, hey, click to go to a web page, right? Type of model of advertising. So interesting. I don't know if you guys have anything to opine on there. Anything?
I've said it probably 2 or 3 times on this podcast, I remain convinced that if that model works, it'll be because the agent is given access to some special inventory, discounts, service model that you can't get somewhere else. Because otherwise, it's just I struggle to see what the actual like added value for the end consumer is of like a special, like why not just go to like if you want a Best Buy agent, just go to the Best Buy site and talk to their agent. Like why does it? What it's just what is the sort of special benefit of it being served up natively in ChatGPT?
Context about who you are and what you care about, what you like.
I guess I also then question why couldn't ChatGPT handle the chat? It becomes ambiguous to me why there needs to be a separate parallel agent introduced into the conversation unless that agent is bringing something unique to something timely, something discounted, something where the supply is constrained, that kind of thing.
I'd only say it's worthwhile to experiment, but some of these things just won't amount to anything.
I love this. Like, I love this, Brian. I love this. We all just get caught up in this stupid minutia of all these little stories. We're like, dude, none of this matters. I love that. I love it. Okay, let's go to the next thing that probably doesn't matter. OpenAI exec shakeup. So, they're preparing. Apparently they privately filed for the IPO. We don't know what's in there or what it looks like. But they have a new CRO. His name's Dali Rajic. I can't pronounce it. He was at Wiz, which got acquired by Google for $32 billion recently. He replaces Denise Dresser. She was only in the role for about 9 months. Also, COO Brad Lightcap recently departed. And I think we wrote about how Fiji Simo has health issues, so she's not there anymore either. So a lot of shakeup up top. That's usually not a good sign, especially like pre-IPO. You'd think execs want to ride it out, but maybe they know something that we don't about the IPO. So keep an eye on it. But any thoughts on that, Brian? Any insider baseball? You know what's going on?
Well, I don't know exactly what's going on, but in terms of generally trying to follow that sort of thing with a company like OpenAI, they're clearly churning through management fast, but I see it as a variation of the hire fast and fire quicker model that I think a lot of early stage companies go through. I think there's a difference here because of the scale of the company, so it feels more significant. And it's really hard to imagine that anyone could get into a role a senior role at a company of this size and have any clue what's going on. Just given how big they are in an absolute size, right? And so I think that this would be a bigger issue once they're public. I think they know that the least bad time to do this is now. Like it's bad, yes.
Yeah.
Interesting.
But they're better doing it now than after they're public. And I think that certainly the reporting that I've followed closely around the tension between Altman and Sarah Friar, I'm inclined to believe, because I don't see shall we say, disciplined business from the Sam Altman side. I see a Sarah Friar trying to run a more disciplined business. And I see the advantages in building something in a way that is not disciplined, because how else do you, again, experiment at scale and find opportunities if you are overly disciplined? Okay, so those tensions are there. I think they want to make sure they've got the team they want ahead of the IPO. And if they weren't 100% convicted and committed to those people, then this is the time to make that change.
You sound like you're confident that these people are being fired by Sam and not quitting, though.
Could be a little bit of column A, a little bit of column B.
Could be. I don't know. Well, I am Sam, so I know, but I'm not going to tell you. Okay. Next story. Anthropic is doing watermarking now. So they have to comply with a new law in Europe, which is the EU AI Act, which requires disclosure of AI generated content. And so Claude output will now be watermarked. So text, files, images, things that Claude creates, it'll travel through copy paste. It may not travel through all sorts of different reworking of the material and the content. So that probably still needs to be figured out. Google, Meta, Microsoft, OpenAI also have committed to complying with this law. And there's others, smaller AI tools, Suno, Substack, et cetera, that are also doing watermarking now. So, important to kind of flag, I think, from like a consumer perspective that, disclosure is coming, at least in Europe. It'll probably come here too at some point. And I think that's generally a positive thing. But I think it's important also for marketers to note that, like, hey, as you use AI more and more and more to generate creative or copy or things like that, like, disclosure is coming. It's more and more of an important thing. Anything to say there, guys? We good?
I would just add that Anthropic appears to be more aggressively favorable, shall we say, to being regulated. They are positioning themselves with heads of state in Europe in ways that are anticipating the power of the regulator, and I think they're just trying to get ahead of that. So if they can find ways to do things that the EU wants without a fight and just proactively do things, they seem to be accounting for that in a lot of their choices, I observe.
Well, the watermarking just seems so reasonable. Like, it's clearly, like, cryptographically probably not that complex, to be honest.
But as opposed to an Elon Musk style, if they want it, we hate it.
Sure.
If they want it, why can't we do it?
But I'm relieved is not the right word, because it makes it sound like it keeps me up at night. But I was glad to hear that the watermarking, I was like, this is such a no-brainer.
Anybody that's up in arms about that, I mean, I don't know if anybody's up in arms about it, but if you're up in arms about that, I don't know, go find another hobby or something. Like, okay. Last quick hit of the week. So Zuckerberg put out this like long manifesto called "The Future is for Everyone" on Meta's blog, and the gist of it is him arguing that superintelligence shouldn't be concentrated across a few AI labs and with the government. Meta wants to push harder on open sourcing some of their AI, which is weird to me because like they were going hard on that last year with like Llama, and actually earlier this year they privatized Meta AI, and so I thought it was odd for him to push that out. He wants closer collaboration with the government, between the AI labs and the government. He also pledged $1 billion for like a community fund near data centers, so like giving money back to those communities. Weird. So anyways, that was his very long manifesto. I didn't read the whole thing. I admit it. I used AI to summarize it for me. And there's obviously a lot of critics all the time when something like this goes out. They're saying, it's self-serving, it's positioning, it's all about like Meta. My thought would be like, okay, well, Meta is pushing harder into AI. If I read the tea leaves of like what they've put out this year, it's more like around cost, right? Hey, we're going to put out AI tools that are cheaper, less token usage, they're better, they're faster. We're going to play in the frontier model game. And it's them now starting to sell compute as well, and infrastructure. And, all of this is probably tied together, and Zuckerberg kind of like asserting, hey, listen, we're here to play the AI game with the other AI labs and the other AI companies. And like, we're going to take a stance, and we're going to be pro community. We're going to be pro open, and it's him doing a little bit of a branding exercise. But yeah, he put out a manifesto. Any thoughts on his manifesto?
I mean, my general thought is that whenever they do something that's very intentional and it reflecting where they are competitively on the dimensions that he cares about, and he clearly cares about building some frontier models, I guess, and being a software company. Oh yeah, they happen to make money from advertising? Really? That's always been their philosophy. I mean, certainly many Silicon Valley centric companies, it's like advertising is very much a secondary thought, even though it's like, oh yeah, I guess it makes money for now. I mean, sure, why not?
Well, so Brian, I'm curious to like get your thoughts on, because yeah, like Meta is, from a consumer standpoint, it's an entertainment company. Like they produce entertainment, like you scroll Instagram or you browse around Facebook, and it's entertaining as a consumer. In a B2B context, they're an advertising company, they're a media company, they sell ad space. And like with this super intelligence thing, which Mark Zuckerberg's been following that for a while. He did another post like a year and a half ago that was similar. Like super intelligence is coming. which strikes me as like, well, that doesn't really sound like an entertainment product. It sounds like a consumer utility, more like it's like a telecom thing, or something that provides kind of more practical utility to people. And then on the other side, well, they tried to acquire Manus, and that didn't go through. But that was less about advertising and more about like business productivity, like you said, like being a software company. And so, like, I don't know, is Madison and Wall like have any thinking around, I don't know, Meta's future optionality in terms of what do you see them doing over the next couple of years?
There is a very clear line, I think, in terms of what Zuckerberg has always wanted Meta to be. No different than, you can see that Snap, when you read the S1 for Snap and they say we are a camera company, obviously, no, but that is what Evan Spiegel is always wanted Snap to be. And there is a through line towards that, albeit by way of making a ton of money doing something that doesn't seem obviously related, but very much from a product development perspective, that's the direction of travel for the CEO and all their initiatives. Similarly with Meta or Facebook, it's all about connecting people. And whether that means allowing armed insurrectionists to find an easier way to get together and have a kumbaya moment before they storm the Capitol, or whether that's allowing you to reconnect with your high school friends, or whether that's being able to better communicate with your office colleague halfway around the world with no legs and an animated version of yourself. Great. That's all the same thing. And I think that if you look at the choices they've made through that lens, that is what they're doing. That's how WhatsApp fits. It's how Oculus fits. It's how everything they've been doing fits. But it's also why I think you could argue Zuckerberg has kind of ignored advertising. And I think that you could argue that people who sell advertising at Meta aren't really that important at Meta, despite the fact that they generate as much revenue and as much growth as they do, because it's not what Zuckerberg's focused on.
Okay, this is a great transition. So we want to dig into your work a little bit more, Brian. So you put out tons and tons of content. It's incredibly rich content. You're doing tons of research. You're kind of looking at the big picture, which is fantastic. I think, I want to start because it's a good segue. Just looking at earnings from Q2. We kind of scan the earnings in our newsletter. We send out some basic kind of thoughts and opinions on it. And like there was this common thing that kept coming up, which was, we like to use this little trope, AI earners and AI burners, right? So there's these companies that spend a lot of money on AI, but don't seem to like generate all that much tangible value out of it, at least from the investor point of view. And those are companies like Meta, right? Or Apple. And then you have the AI earners, which are very clearly just infrastructure plays, right? And it's a Google Cloud, right? They had like 80% growth this past quarter. And then, there's obviously AWS, there's Azure, and these companies, the market loves these companies, right? And they keep getting rewarded and their stock goes up every time they talk about all the compute that they're selling. And so, what I noticed in this wave of earnings was some of the AI burner companies like Meta, for example, they just had tremendous ad growth numbers, but the market didn't seem to care all that much and still crushed the stock. And so I guess like thematically speaking, I would love your thoughts on like, is ad revenue being devalued, I guess, like in a way on the market? And what does that mean for marketing and advertising, if it means anything at all?
Yeah, you could argue it doesn't really matter much other than it's a means of producing cash flow to fund the build out towards this future that the founders or CEOs have been leading towards, right? So Wall Street has had to position or reshift how it thinks about Meta in particular, but Google also, from the fact that they have this source of revenue and cash flow to something else that the company wants to be, which becomes clearer with the scale of this CapEx that they're putting out there. And so why they get whacked, I think from a valuation perspective, is when there's a mismatch between how much they plan to invest and the probability of getting to some future that they may or may not be able to commercialize. And so it's one thing to make tens of billions or 20 or $50 billion annual bets on CapEx. But once you're in the hundreds of billions and there's not like a clear pathway, it's not hard for these stocks really to move wildly depending on those changing expectations, because it really isn't about the advertising business at this point in time.
Is that so if I'm a marketer, right, and I'm Mondelez and I've spent all this money with these companies, and all of a sudden Meta and Google already don't care all that much about the customer, the marketer, but now all of a sudden do they care even less? And does that stifle innovation? Does that, or how does it matter?
I would push back on that a little bit. I think Meta doesn't care. I do get a sense that Google cares a little bit more, but I think the better way to think about it is, I think where they really care at the CEO to direct report level, do they care is, are you buying these array of services that the company is trying to build towards? With Meta, it's a lot harder because there really isn't much of a product beyond the advertising products. But that way you could look at a Luxottica, where they're clearly tight with that company because they're building products together. So if Luxottica spends money or doesn't spend money on advertising, I suspect Mark Zuckerberg pays attention because of the overall commercial relationship. Oculus might be a tiny business, but it's outsized in importance to Zuckerberg. So you're spending money on that? Yeah, they care. Similarly with a Google, the question has to be, what are you doing with Gemini? What are you doing with cloud, right? And then how are you tying that into your advertising solutions? Doesn't matter whether or not they productized it the way that would make it easy. But the point is that when you're helping the company accomplish its vision, then the people at the top of the company care. And the problem is that, the companies themselves haven't always executed that well. Google, at least you could point to building out a real software business with the cloud business. I mean, even from the earliest days when they're building out Google Sheets and Docs and all that, they were building software that was widely used, even if there wasn't a lot of revenue. Yeah. Meta doesn't have that history at all.
No. Yeah.
Okay, let's pivot. So you've put out some forecasts around AI-driven ad revenue or ad growth. I think you know what? I don't want to screw up the stats that you put out. So you can tell the audience, what is the projection that you have today for AI driven advertising? I think by 2030 was the number that you had put out. It's it's going to be 25% of all ad revenue. Is that right, Brian?
Yeah. Well, listen, I don't want to screw up my own numbers either. We published them a few months ago. Go to madisonandwall.com. You can read our full piece on this. The bigger point is that it really depends on how you define AI-based advertising, right? And you can come up with almost any number you want, depending on that definition, because we could argue that almost all advertising has some AI element. Now, what we tried to quantify was the growth and the value of PMax, Advantage Plus, all those similar products. And so, yeah, you do get to a pretty healthy share of the overall market. But I think that defining it really matters, because just, number for number's sake is meaningless. That's where it's any critique of OpenAI's $100 billion claim. Well, it really depends on how they're defining, their business and what it'll look like and how much capital they're going to invest to get there. Because, the best way to get to $100 billion of revenue is to spend $200 billion.
Brian, do you see AI driven media as being exclusively performance or outcomes based media, or not?
The way we're defining it, it's almost all, or at least there's going to be some form of a performance or outcome attached to it. So even if, say, you use PMax and it bought some connected TV inventory, well, there's going to be some kind of an outcome-based score. It doesn't have to be credible, but there will be some outcome-based element making the decisions around that spend.
Does Madison and Wall, do you see that, I don't know, distorting the typical whatever large marketers marketing mix? Just sort of more and more media just going into a performance bucket?
So actually the bigger issue that we see, and we wrote about this a few years ago, and yes, it was a piece sponsored by Google, but independently written. We call it the future of planning as a platform. And this,
Yeah.
you can read it. You'll see this is not pro any one platform. It was more about the bigger point that the PMAXs, Advantage Pluses, and equivalent products of the world are almost certainly going to proliferate further. And the question I was trying to raise is, what happens to planning in that world? Because we're used to a world where line items in media were defined based on the workflows and the processes. Television was a line item not because of the different consumer experience as much as it took different work on the part of the agency and the marketer to manage that whole process. As you automate these workflows and you get to a place where you set an objective and you're completely indifferent about what kind of medium or what kind of consumer experience you're getting, as long as the outcome is the thing that's getting optimized, and all the decisioning in between is automated.
Yeah.
What exactly is the line item on a media plan? It's not video, audio, print, whatever. It's Google, Meta, Amazon, Pinterest, Reddit, etc. And so the bigger point of this piece is what becomes of planning as we've known it. And now there's a lot of opportunity for strategic planning, comms planning as it's been known, account planning on the creative side, sure, but core planning, less important. The equally important, I think any media owner needs to be mindful of this. If you don't have a platform like this or a capability, you really should, or you've got to start aggressively partnering with someone else who does, because it feels like these sorts of platforms feel like the inevitable form of media buying the further you go out in time.
Mm-hmm.
Brian, have you guys put out a forecast on specifically ads in AI? So, like,
like how big is
Okay.
ChatGPT and how big now?
Yeah.
We know we're going to get numbers pretty soon from OpenAI as soon as they file that S1. So, frankly, why
Yep.
bother guessing?
Yeah, I mean, I think some of the stories that are like, oh, they're on $1 billion run rate already or something like that, right? But
Which means $80 million in the month. So, we'll see.
right. Okay. Another question I had for you was, like all the CapEx, that these companies are putting in, is that damaging to ad tech and martech? Like in the sense that like the money is going into, I mean, I guess it's a similar question that I was asking you before, right? Is like the investment now is going towards that instead of marketing and advertising. Is that like a thing that needs to be tracked or not really?
Evidence supporting that assertion is poor. We have heard some, S4 Capital among them, making that claim. We don't see it in the data. Meaning it's true that there are years where that has been true, and there are years where it's not true. The most recent year is not, and the most recent periods is one where it's not true. Meaning, what we see when we look at publicly listed companies spending on CapEx is clearly going up and to the right. When we look at their spending on advertising, or at least sales and marketing, it's also up a lot. I think that it's safe to say that these budgets are generally managed very separately. There will almost certainly be some marketers, and there could be some smaller ones in particular, where, it's actually all about the cash. And if you're using cash to fund one thing, you're not going to use cash for another, unless you're willing to drive your cash down to zero, or you don't have lines of, credit available to you. So I don't think it's necessarily true, but it could be true.
Okay. Last question for you, Brian, and then we got to close this out. Do you think AI grows the advertising pie, or do you think it just eats from other pieces of the pie?
Eats from other pieces for the most part. Now, the only way that it grows advertising is if it changes a few things. One, does the competitive intensity of categories and subcategories change because of AI? And what I mean by that is, you take a category like auto insurance. Auto insurance used to be a very sleepy category. You had a stable equilibrium in the United States between different carriers. Then Geico comes from out of nowhere with an anthropomorphic gecko. 10x the spend of anyone else. What does everyone have to do? They follow suit.
Mm-hmm.
You can find situations like that where it's not about the growth of the business, and it doesn't grow the business. It's about the competitive intensity inside of the business. So is there a sector where AI alters that competitive intensity? When the competitive intensity changes, that's what changes the marketing piece. That's the first thing. Second, are there new businesses that are creative destruction of the economy, not the end of J. Walter Thompson and that Foucault building, right? But the actual Schumpeter concept, new businesses forming where places others should go away. Does the creation of new businesses that depend on AI lead to categories that are advertising intensive or more advertising intensive than the ones that they replace? So, for example, e-commerce based retail, 4 times as much on advertising per dollar of sales as bricks and mortar based retailers do. So the act of creating of a category or a new variant of a category could lead to advertising, but it could also go the other way because it could diminish that competitive intensity and or it could lead to the destruction of advertising intensive subcategories. And then the last way to think about it is, does it contribute to the overall growth or decline of the economy? And if you argue that it does because productivity is improved and that leads to a lot of other things, then you could argue that it contributes to a tailwind, but a tailwind, not a direct driver, meaning growth is higher than it otherwise would be, but isn't necessarily directly observable as a driver of growth, if that makes sense. How's that for a short answer?
So I love that. I mean, you're this again, you're blowing my mind. I love it. I think that the first two really resonate with me, which is like, does AI basically make marketing and advertising a better lever for a business to grow versus other areas of the business, right? And a better or a worse lever. And if the answer is a better lever, then maybe AI grows the advertising pie. If a worse lever, then it goes the other direction. I guess because this is what we do on this podcast.
It's a subtle but important difference. It's about the business. It's not about advertising. In other words, if AI changes a business to make a business differently competitive with its competitors, that leads to, most advertising is funded as a percentage of revenue, full stop. So what causes that percentage of revenue to go up or down? That percentage of revenue will go up or down based on the competitive intensity of the category. The competitive intensity of the category could change because take a category where you've got 70% market share for one player and you've got 5 players with 30% market share. AI comes into the mix. The incumbent dominant player has been doing nothing to innovate. Now the smaller players are better positioned to innovate. All of a sudden, all of them are. Now you've just transformed the whole category from one which had one monolith and a bunch of small minnows. Now the small minnows actually feel they can take a run at the big one. The competitive intensity of the category just changed. Now what happens to advertising? It goes up a lot. But the opposite can also be true. That has nothing to do with the efficiency of advertising. It has nothing to do with what AI does to advertising directly. It's all about what AI does to business, and that's what drives the total advertising budget.
Well, I will add to that one thing, a conspiratorial thing, is that with more money going into very large performance media platforms, there becomes a macro opportunity for those platforms to start actually orchestrating the macro level of competition because they are allocating everything, deciding winners and losers, essentially, to some degree.
I think there's something to that, but they'd have to, even they aren't big enough to necessarily cause that. But in some subcategories, I bet that's plausible.
And Brian, just because I'm going to make you do this, I'm going to ask you the question again. Is AI going to grow the pie or is it going to make the advertising pie smaller? I'm going to make you pick one of those sides.
Directly, neither.
Okay. Fine. And with that,
answer, at least.
You gave me an answer. I'll accept it. Okay, Brian, this was awesome. You blew my mind multiple times. It's always a pleasure. You're a wealth of knowledge. Please follow Madison and Wall. Where can the listeners find resources from Madison and Wall? What should they be reading?
There's our free Substack, madisonandwall.substack.com. That's lead gen to turn you into a fear of missing out based corporate subscriber eventually.
Love it. Okay, go subscribe, go pay Brian for all of his brain power and his team's brain power. They are awesome. Thank you, Brian. Thanks, Myles. Thanks to the listeners. Quick note, we have enrollment open for our September AI Accelerator sponsored by Bliss, which is a T-Mobile platform. Please register or enroll for that if you haven't yet. Right now it's 20% off for tickets. We still have like 40%, I think, availability. We've sold out like 60%. So get on it. You have another month and a week. And thanks again. Thanks, Brian. Thanks, Myles. We'll see everybody next week.
Thanks, Brian.
Thank you.